Morning everybody, it's Christian from Serene Education with the 4 Majors Notes update for the 8th of June 2011. It's going to be going over our CTC strategy on the 4 Majors this morning, starting with good old Euro. Let's have a look at the daily. And you can see over the previous 2 weeks or so, Euro really gaining momentum now, higher swings, and we keep getting up candle consolidation, up candle consolidation, up candle consolidation. And we're now definitely heading towards the 1485 mark at least, or thereabouts. Ideally topping out at 149500, but we are definitely on our way to these marks around here, roughly the major plateau area, 148300 at least. Moving averages crossing over now. Moving averages evenly spread, especially the 50 and 200 confirming a long-term bullish trend, and you can see bar the pullback that we had in the early parts of most of May, we are now heading back up to those areas again. The extension that we saw, there we go, you can see it quite clearly, just punching through the 38.2 on its way to the 50, just short of the 50% area before we saw a bounce to the upside. Now you can see that Asian market has seen a slight pullback since yesterday's bullish up candle. Ideally we'd like to see a close above this candle here at 146900. So a break and close higher than 146900 would definitely confirm further movement to the upside. We don't want to be trading until we actually see a definite close higher than that. It's got to break previous highs, especially the Asian market high, to confirm further extensions. We'll expect further bullishness to the upside. Let's have a look at our intraday. So we'll just put that down on our intraday. Let's look at the hourly, for example. There we can see the plateau. It's 46,900. Notice the highs getting lower as prices moved higher, and you can see price being squeezed now between 2 points quite clearly, the highs. So it'll be remain to see how much more. There's quite a lot of resistance in this area now, so are we looking at possibly a pullback of some sort, a consolidation range in this area as price is being squeezed to the upside in this band? So the major trend on an hourly chart is still positive to the upside. However, be aware that price is now being squeezed. Are we seeing the starts of a consolidation, and most importantly a convergence on this pair as we head towards that all important high point that we noticed on the daily? So consolidation before we see another breakout. It has to close and close very strongly above 14,6900 for further extensions to the upside. Failure to do so, we could see a wick, a shooting star, a piercing pattern forming around here, a failure, almost a stumble before we see price reverting to the downside, and a break of this trend over here would definitely see a break of the prior resistance and breakout. As long as it can stay above 14,6500, then we are still looking for, all systems go for further bullishness. However, a break of this trend as well as this major support area that we saw with the previous break would definitely see price possibly testing the previous swing high at 14,5600. A break of that would definitely see this range right down here at roughly the 1447.70 mark, and a possibility of 143200 being on the cards again if and when we see these breaks to the downside. So as long as it can maintain its composure and stay above this trend line, for one. Two, if it finds support at 146500, and three, if it can break the 146900 mark resistance level for this time frame, and ideally break and close higher than 1470, 7100, then we're definitely going to be seeing that long-term level here at roughly the 148300 mark being tested quite soon. So you can just tell a hell of a lot just by looking at an hourly chart. we have all this information here on an hourly, just showing you this channel. Got to be aware today. Have a look and see if there's any news out on the European session. It'll be interesting to note. Let's have a look today. What do we have? We have we have revised GDP quarter-on-quarter figures, expecting no change there at 0.8%. Then we have industrial production month-on-month figures, they're expecting a lower figure. The previous figure was 0.7%, they're expecting a 0.1% for the German industrial production month-on-month figures. It comes out lower than that. We're definitely going to see Euro take a turn for the worse. We're going to see the US dollar strengthen against that. So that's pretty much the most important ones. We've got German trade balances, French budgets, French trade balance. There again, these could also have a slight indication of effect. These are coming out 7:45, so literally, what's that? 30 minutes from now, GMT. We're going to have those coming through. I've seen this morning in Euro German trade balance that was down 2 billion alone. So these are going to affect the markets. I can guarantee you, more and more. And if news comes out later this afternoon or later this morning, where we're seeing if German industrials, we know that the German market is the largest market in Europe in terms of production-wise. If that comes out negative, lower than 0.1%, guaranteed we're going to see a shift to the downside. So I'd be very wary at the moment now. I'd rather bide my time and see if we can see something happening between now and just let it run its course, because it's in a tight squeeze at the moment. So I wouldn't touch it at the moment now. Wait until just prior to the news, see if we can get a definite breakout. Otherwise, we're just going to see consolidation range. But as long as it can stay above 14,6,500, then look for possible further upside movement. And the trend is your friend. As long as it's trading above the trend, the major trend here, you can see is long-term bullish. We just got to get over this hurdle here at 16,4900 is the prior high, as well as this squeeze pattern. We'll be looking for further upside movement. Next up is sterling against US dollar. Let's have a look at the daily. Here again, very interesting, this one. I was pretty sure that we had a swing. There we go. You can see the intermediate swing. Cable's adamant that it wants to go higher, and sure enough, we've been able to. It's finding support on this 50 and 20 period moving average, and in doing so, stamping out a minor support area and closing higher than the previous candle. Is now trading. It started the Asian session saw it pull back slightly, but it's sticking to the upper range, which is important. As long as it can stay to this upper range and it's trading higher than the previous swing. In this case, yeah, you can see that the intermediate trend is in play. The major trend, as you can see, we have come from. We're still swinging higher, pullbacks along the way, but you can see the direction of sterling has been up. So the intermediate trend in play as we speak. Oops, apologies for that. And that's the resistance level, as we can see, but you can see it's definitely trying to make a break. CTC is extended to the upside, and as long as we can get a break above the close of this candle here at 1644.40, then we should be looking for further extensions to the upside. 1644.40, let's put that in. There we go. So a lot of wickiness, and obviously if we can be trading above this area here and finding a decent close higher than this, then we should definitely be looking for further continuations to the upside. Notice, if we're trading up higher than this, then obviously we're going to be trading below higher than the prior resistance and support levels, and you can see that the swings have been moving to the upside. 200 period moving average on an hourly chart is in play, and we've seen a bounce to the upside after a squeeze pattern late yesterday afternoon going into the Asian session. Notice that price was being squeezed. We saw a breakout to the downside. All these wicks confirming downside pressure. That was short-lived though, and we've seen price pull back to that. But we might see another resistance at this level here. If we don't see price breaking, closing higher than the 1644.50 mark, we're definitely not going to be seeing price trading the high, and that intermediate trend that we see on a daily is going to be the downfall of this pair. So need to be trading higher than that to confirm that momentum is still long on this, and if so, then obviously we're looking for long positions for this long term. So ideally we still want to see price trading higher than that, but just be aware there's a ceiling level in play as we speak. On the 30-minute chart you can see the lower swings. It's trading below the 50 period moving average at the moment. Now it needs to close, this 30-minute candle needs to close higher, and by doing so we'll confirm the bullishness for this pair. Otherwise what we could be seeing is price failing to break higher, and so forming another resistance level, and we should see price reverting to the downside if it fails to break any higher than this. Notice it needs to get above that. But there again, we don't want to be caught in all this wickiness. You can either bide your time and say, great, they can have that between the 1440 and 60 mark. That's 20 pips you can give back to the market if you don't want to be caught in any wickiness. But it needs to close higher and quite bullishness on that, just to even think. You can see back here, for example, a lot of resistance in the past, even as far back as the 1648.50 mark. So it needs to be getting above 1644 ultimately for now, short term, in order to even think about a possibility of further extensions higher for this pair. Otherwise we could just see price rolling over now. You notice that this swing here is still lower than that one there, so you can see price overall is now simply moving to the downside, and we don't want to be caught in this just for the sake of a couple of pips. We want to see bullishness. We want to be trading bullishness. If we can get into the bullish trades, then obviously we can be getting our pips a lot quicker, and we can profit a lot larger on these trades. So rather bide your time. There's news out this morning, especially on the European side. That will obviously have an effect on sterling. Later this afternoon we have the US dollar. We have some news on the beige books out, the crude oil inventories. So those could also move the market. We also have OPEC meetings today. Oil, that could also churn the market or make a huge difference in terms of what the OPEC meeting results are all about. Just remember, factor those into your trading today to give you an idea of what's likely to occur for this pair. Next up is US dollar against Swiss franc. Here again, very interesting. The past couple of days we've seen a massive sentiment change, and then we've seen the Swiss franc, or sorry, the US dollar gain a bit of strength against the Swiss franc and stopped the rot as such, and formed a support area at the lower end of this bearish candle here at 83.50 range, and then it's just been plodding on sideways, gaining a bit of momentum. Yesterday we saw a higher close on the previous day, still a very indecisive spinning top, and Asia market trading no range at all. So ideally what we want to do is see a close higher than this candle, the prior candle. So it's got to be trading above 83,900 to even contemplate looking for further upside movement, and that's clearly seen on this time frame here. The hourly gets rid of all that noise. You can see that resistance. The only good thing about this, coming into this trade or this time frame here, you can see the bearishness on this trade and the break of the major trend on this time frame. And then we've seen price found support, as I mentioned, the 83, and it's trading now above the 50 and 20 period moving average. And if we can still find further bullishness, then we can see the US dollar rally in the next couple of days or so. You can find it's definitely finding support at this level. A break of the support area here would definitely see another attempt at the 83,300 mark. But as it stands now, CTC is still extended to the downside. We do have a blue arrow, and it's still very indecisive. So it's just telling you heads up. It's giving you a heads up signal. That's all it is. It's not giving you a buy or sell. Just a heads up. We are trading in a range. You can quite clearly see that it needs to be breaking above 83,900 to be even looking at longs. And your next target, if it did do that, would be your 200 period moving average, roughly around the 84,400 mark. But until such time as breaking above the 83,900, you got to see that happen before you even think about going long, and vice versa. It's got to be trading lower than this consolidation range here at the 83,600 mark if you want to see further downside movement. Otherwise, you're sitting tough. you're taking it easy, because you'll notice that the Asian market high, the prior one, is not too far off. There it is there. So gets above that, then you've got to worry about that. There's just too much happening in this consolidation range to even bother. So rather wait for a break above this area here at 83900, or a definite break below the 83600 mark to give you further extensions to 8333. Last pair of the day is the US dollar against Japanese yen. We've just seen the pair trading below, or reattempting on a daily time frame. It's trading around its 80% mark, which is a long-term support and resistance level for this pair. We saw a bounce to the upside not so long ago in early parts of May. Are we going to see the same here? Indecision yesterday, very small range, a lot of action happening on the bottom end of the wick, confirming still bearishness. Asian market trading we saw climb higher, however failed to materialize, and as of the European session open this morning, we've seen price move further down to the downside, but however still in a consolidation range. If we could see price closing below 80, psychologically this is just going to trigger a sell implication, primarily because we haven't seen a support area being found at a prior support area, and if we don't see that, psychologically a lot of people are just going to start selling it, and we could see definite indications of further selling right down to the previous swing and all-time low, roughly around just short of the 7700 mark. So very, very important to, if we are to see a bounce, then we have to see a shooting, a hammer formation, hammering on the bottom, a nice bullish engulfing. So we have bearish, indecision, bullish. This will show us a definite morning star on support. If we get a morning star or a hammer, then we're definitely looking at a change in market sentiment, and we're definitely going to see a bounce to the upside. If we don't get to see any of those today, then we're going to just see price reversing to the downside and close lower. So two candlesticks we need to see today: either a bullish engulfing, so another high today, obviously in good US news, or European bad news, will definitely take this high, and as long as it's meeting or matches the prior candle that we saw on Monday, but upside, then we're going to see that on a down at support, or in this case the support level is going to show us a morning star. We call it a morning star, three candlestick pattern, and if we do get that, then we're going to see upside movement. Notice over here, for example, we had down movement, bang, we had equal drive, down bearish, up bullish, equal drive, cancelled this prior one at a round figure 80, and we saw price reverting to the upside. So got to see the same happening here. We've got to see a bullish engulfing candlestick like this one we saw here on the 6th, and if we get to see that, then we'll definitely see that. Otherwise, another one we like to see, another one is a long wick similar to this candle here that we saw on the 17th of the 3rd. That's got to be sitting on the 80 mark though. Price action's got to stay above 80, and the long wick's got to be below. So it's confirming that price action is happening at the top end of the range, which is confirming that there's more buying occurring in the market now, and we should see a drive to the upside. All this happening on a support area. Candlesticks, these only happen around support areas or resistance areas. They work a lot better when you see these confirmation drives on support and resistance areas. So either morning star by the close of play today, or a hammer will dictate where this price is going to go next. So if we look at our intraday stuff, this is 30 minutes. 80 is the long-term support area, is now being breached. And as long as price is trading below that, then the outlook is negative. Notice that price has been moving, the highs have been moving further south as we've been going into this consolidation range, and sure enough, we've seen price now break below a very important support area. If price fails to materialize and push back higher, then all we're seeing is a consolidation at below the 80, and we should see extensions lower. CTC is in our favor, and that failed pullback has now formed a swing low, and that swing low is now taken price below the 80% line, which is a long-term support. And if we don't see price trading above the 80 mark for the remainder of today, then all we're going to see is a bearishness setting into this pair. If this is true, the last swing is the true swing lower, and we don't see another swing to the upside, then what we're seeing is projection. This is the start of the downtrend. This is the consolidation, and these are the points. 61.8 would be our first target. 100% would be roughly around the 79.60 mark. So 100% of the initial move would take us down to 79.6. So that's a guideline of where price could go to if the momentum and if it still stays below the 80% mark for today. That's it for today, guys. Hope you have a fantastic trading day. There's a lot of news out today. Factor that into your trading. We've got European-wise, we've got the German industrial figures month to month. They're going to be quite important. Otherwise, we have the what do we have? Yep, crude oil inventories in the beige book this afternoon. Well, later this evening on the US dollar, and then the New Zealand dollar's also got a hell of a lot of news coming out at 10 p.m. GMT this evening. So if you are trading the New Zealand dollar, factor that in. You've got official cash rate. They expect no change there, so factor that into your trading. Have a great day. Trade serenely. Keep it simple, guys.